Hello and welcome to Share Spotlight. Today's guest is Paul Welch. He's the CEO of SDX Energy. Welcome, Paul.
Thank you very much. Pleasure to be here.
Great. Could you give us a slight outline of SDX Energy, its production and exploration assets in North Africa, and your strategy going forward for those assets?
Okay, thank you very much for the opportunity. So we're kind of a two-country focus at the moment, Egypt and Morocco. So we'll start with Egypt. In Egypt, we have two producing assets onshore in the Eastern Desert. We're making roughly 4,000 barrels a day of oil there, primarily oil, very little gas. And then we have one exploration asset up in the Nile Delta called South Tassouk. So again, two producing assets and one exploration asset in Egypt. And then in Morocco, we have one exploration asset called Lal Mamouna, and then one producing asset called Cebu. And at Cebu, we're making about 6 million cubic feet a day, which is roughly 1,000 barrels a day gross, 750 net. So our net production is about 4,750 barrels a day. Our strategy is essentially to grow both organically and inorganically. So within the assets that we currently have, we have an asset in the Eastern Desert called Maseda. That has development potential, and there we believe we have the ability to double current production. So at the moment, the field is making about 4,200 barrels a day gross, and we think we can take it up to 8,500 to 9,000 barrels a day. And then in Morocco, we just picked up this asset from an acquisition we recently completed. It's making 6 million cubic feet a day. We believe we can take it up to about 24 million cubic feet a day. So we see a lot of growth within our existing asset base. And then I'm assuming we'll talk about this here in a few minutes, but we also see the ability to acquire assets in kind of what we believe is a down market, okay, and make very accretive acquisitions, similar to what we've just done with the acquisition of some assets from Circle Oil that we recently purchased. So again, we see both organic and inorganic opportunities.
The acquisition of Circle Oil, it was quite a big acquisition by you.
It was, yeah.
Has that something you've been looking around for some time, some assets like that?
Yes, we've been looking at that particular asset mix for about a year. So it took about a year to close that deal. And what we ended up purchasing were the assets that Circle had in both Egypt and in Morocco. So in Morocco, the assets that we have were everything that Circle had there. And in Egypt, what we purchased was 40% of the Northwest Kemsa field, where we already had 10%. Mm-hmm. So it was an asset that we knew well, we knew the company well, we understood the difficulties that we're in. So for us, it was a very good acquisition. We increased our production by 250%. We increased our reserves by 65%. I think most importantly, as we improved our cash flow in 2017 by $22 million per annum, and in 2018 by about $28 million. So it was a very accretive acquisition. We paid $30 million for it, so the payout's about 1.4 years.
Well, not long at all in this industry, is it?
No, it's great.
Obviously two very different economic and political climates, Egypt and Morocco, and obviously Egypt has been unsettled recently. Morocco much more stable and a better sort of tax enterprise for explorers like yourself. Do you see that you're going to spend a lot of money in Morocco, clearly where there's tax benefit to do so?
I think we're going to spend equal amounts of money in both places. I think the issue with Morocco is that it's a fairly limited opportunity set there. I mean, people have been trying to kind of grow the business there, and the government has incentivized people to look. And so we're certainly going to do that. But at the moment, what we see is more opportunities in Egypt and the ability to grow the business there. You talked about some of the issues that people have had there, and we've experienced some of those. But we believe that they are largely settled. The IMF and the Egyptian Authority now have put in a kind of a plan in place to stabilize the economy and to grow it from here. Mm-hmm. And so we believe it's a great place to do business now, and in the future will be even better.
In Egypt, you obviously started the SD1X well. I think you're targeting 100 million barrels, aren't you, I think, there?
Yes.
What's your time scales leading to sort of more announcements and finalising drilling and testing? Where are we in time scales?
Okay, so we spudded the well about a week ago now. So it's going to be a 30 to 45 day well. We have two targets. One is a gas target up shallow in the Abu Madi, which is, we believe 300 to 400 BCF around there. And then we have some deeper oil targets, which are between 50 and 100 million barrels. We will more than likely make an announcement halfway through once we get through the Abu Madi target. So, you know, maybe 2-3 weeks from today, we'll have one announcement, and then hopefully another couple weeks after that, a second one. Again, it's a dual objective well, just spudded, so it's early days, but, you know, we're excited to finally have, you know, had the opportunity to drill the well because we picked up this acreage in 2013.
So a little break before you actually got into the work on it.
Yes, yeah. Well, again, we did quite a bit of work, you know. So when we picked up the acreage, you end up shooting a 3D survey over it, identify the opportunity, and now we're drilling it. So that took quite a bit of time. Well, it took almost 4 years to pull that off.
I've got a question from Tom Sieber, who's our oil and gas specialist, who you probably know, and he's written
Yes.
up quite a few articles about SDX. He's sort of asked me to ask you what's the current cost of production and what price does the company get for its oil and gas at the moment?
Okay, so let's just start with Egypt first. So our cost of production in Egypt is less than $10 a barrel. We have two fields. One north of Skemsa, our average cost of production there is like $734, and then in Masada it's around $850-ish. Okay. So they're both of them less than 10. In Gemsa we get Brent less 5%. In Masada, we get a Brent price list about 30%, right? Because it's a little bit heavier crude. Right. In Morocco, we produce only gas. We sell only gas, and there we get a blended price of about $9.50 per MCF for our gas. So very competitive.
Very competitive pricing, isn't it?
Yes.
You launched in May 2016. Your share price, I think, has trebled since then. So. That's not many companies can say that. I think your brokers, Cantor Fitzgerald, have got a target of 78p, which is about 11.9 times potential earnings.
Right.
Do you see a lot more room for share price movement, do you think, with the potential new announcements coming along?
Well, you never want to talk too much about your share price because you jinx it. But again, as you said, we listed on AIM in May of 2016, and we've seen a lot of growth since then. I think today, as we shoot this, we're trading around 52 pence, and we listed on AIM at 18. So we've seen a significant amount of growth there. Cantor does have a target on us of 78p. I believe that is significantly discounting our potential in South Dasouk. Right. So with South Dasouk and the growth we see in Masada or other assets, particularly in what we plan to do in Morocco, we see a target price to be fairly north of what they're predicting at the moment. I think they're in the process of updating their numbers. And
just to finish off the interview, what do you think makes SDX a compelling investment case for anybody new? Perhaps the company hasn't really come across much before.
Yeah, I think what makes us interesting is that we're one of the few companies that we're making about 5,000 barrels a day. We have absolutely no debt, and so that gives us opportunity to look for not only invest in our existing business, but look for new opportunities around North Africa. The other thing we have is we have $18 million in cash. Right. So, we're fully funded for everything we need to do. The well that we're drilling at the moment, which is quite exciting, is going to be paid for mostly by our partner. The well costs us $3.7 million, and they're going to pay the first $3 million of it. So, again, we have a lot of opportunity within the portfolio. We can double development potential in Masada. We have exploration opportunities in South Dasouk, and then we have a growth opportunity in Morocco, which can take us up 4x from where we are today. So a lot of growth in the portfolio, very well funded with no debt. So that's, I think, what makes us pretty unique.
Thank you very much, Paul. Thank you for coming in.
Thank you.
If you'd like to find out more information about SDX Energy, please go to the Shares Magazine website at sharesmagazine.co.uk and type in the EPIC code SDX.